Thank you. Those of you who are following us on the internet, I think we also have João Ferreira Marques. I can't see him, but I'm pretty sure he's somewhere in the net. So I'll start introducing the members of the panel. We have João Bugalho, CCO from Arrow Global and CEO from Whitestar. We have João Boullosa, Managing Partner of Duo Capital. We have Bruno Carneiro, the CEO from Servdebt. And we have João Ferreira Marques, the Managing Partner from ActiveCap. I think the topic around this discussion is really the position of the Portuguese market and how the post-pandemic or the ongoing pandemic environment is impacting on NPLs, much related with the fact that a lot of loans are still, I can see you now, João, nice. Hello. How a lot of loans are still under the moratorium regime and how that will impact in terms of the ongoing servicing and deals on NPLs. So I'll start with the question perhaps to João Bugalho, and then we follow the line here, and then we'll pass on the word to you, João Ferreira Marques, with the first question, right? Which is what can we expect from the market in the future, both in terms of what's already happening on the moratoriums and the approaches we may take there.
Right. Okay, thank you, Tiago, and thank you for the invitation to be here today. I think we are now seeing some activity following the odd year we had last year and also the beginning of this year. We did see some activity in the end of last year. We won some interesting deals. First attempts to tap the market following the start of the COVID. This year again, we are seeing an interesting level of activity in Portugal in this last quarter with a number of deals in the market. Before that, the market was really slow, and I think going forward, we have all the reasons to believe that more activity will be coming into market, not only on the back of the COVID, and I think there's going to be a delay for the NPL market to see the activity that will stem from the difficulties the banks will be facing following the end of the moratoriums. But I think overall we are optimistic. We think the volumes will be there. I think there will be a significant shift in the type of assets that will be coming into market, and I think we'll be talking about that throughout the session with a much more predominant level of SMEs and corporate happening than we used to see in the past, although in the last 3 years we already saw some activity on those specific segments. But I think overall we have all the reasons to be optimistic. And again, Portugal, it's a very small market. I mean, there's no way to leave that. But even considering that, we see 400 million, 600 million. There's a big one in the market for a year now. A lot of corporate and a difficult one to close. But beyond that, yeah, I'm extremely positive and optimistic on what will happen. I don't think it's going to be immediate. It's going to take a while before the banks start unloading, but I think there will be a moment when they will be experiencing the problems following the moratoriums, both from private individuals, but above all from small companies, retail type of activity, where clearly most of them will not survive the crisis we've been going through. And once the banks stop the moratoriums, that will be very strongly felt by those entities. But above all, I'm very optimistic in relation to what we'll be seeing.
Okay, thank you. Now the other João. We'll have 3 Joaos on the panel today. So,
yeah, I think the moratoriums and what's happening right now in the economy will impact, yes, the servicing. That's your question, right? To the fact that some companies that were healthier before will have some problems right now. So and the banks are starting to offload some of those assets. So companies that are performing, but still there's a big problem to be solved. And so the servicer have to adapt to this kind of new challenge, right? In terms of underwriting as well, and also servicing, because the workout that is expected is completely different than just servicing mortgage loans. So in terms of the capacity of the servicers, yes, there's a challenge in here for underwriting in terms of understanding, how these assets are performing, how these companies are operating, and the potential for the future. So this is also almost like a gray area between distressed and private equity. So there's a challenge in there, and yes, and in the servicing, the workout teams have to be much more knowledgeable about negotiating and being more imaginative or innovating in terms of the potential restructuring of those businesses. Also, another challenge, I guess, will be maybe there will be an incentive for the government maybe to change the law regarding insolvency law or the pair agreements or so forth, and if that is changed because of the problematic situation of those companies and of some households, families, that brings also a challenge. Will those people have more time to adapt, to adjust to the tough economic situation? Does the insolvency, in terms of timing for households, will be diminished? So all of that, of course, impacts the capacity of those individuals to repay the loans. So let's see what will the short future will bring, because we are still not seeing what will be the impact of that in the economy right now.
Okay, thank you, Bruno. Now on to you.
Yeah, the only guy that's not called João on the panel. Well, thank you for the question, and thank you, DDC, for the invitation to be here. I think I'm like João Bugalho. I'm also quite optimistic about the future. I think we'll have, of course, challenges, but I'm quite optimistic. If you look to the market, and I think João summed it up, if you look to the market, Portugal is a small jurisdiction within Europe, but nevertheless, it has activity. Last year we saw a busy end of last quarter. This year, about the same time, we are seeing again activity in the market, and of course, with the economic constraints that will arise from the pandemic, you'll see the pipeline growing up. I don't think it's going to be, right now. It's not going to be early next year, but you'll see it. I see it growing up. I think it's common understanding that the NPL ratio will grow basically to the double of where it is right now. I think the last numbers I saw was something around 9% or something, and we are going from a 5% rate, so it's a big increase. I agree that we will probably see more SMEs coming out to the market, but let's face it, many of those SMEs were already zombie. Many of them were already going through a rough period, which the pandemic made worse. So at the end of the day, I'm quite optimistic about the market. I see we'll have exciting times ahead of us, and that's always good, because even though the market is small, you have a decent pipeline, and I'm sure the pipeline will grow. And I also think that you have, to be honest, I think you have servicing capabilities within the market. It's a mature market, even though it's small, but it's a mature market. For the level of transactions that you have every year, I think you have a decent servicing landscape.
Yeah. Well, we certainly feel that from the perspective of a law firm and the deals we're working on. We didn't see or didn't feel the decrease or the number of transactions, but I think going back to the initial question, and I would like to hear João Ferreira Marques about that as well, is actually the trend. We've heard about some of the trends, right? Different type of assets, increase on the number of NPLs, and a sort of a different workout and different laws being enacted. João, any other trend before we move on to the other question, which I think links much to what has just been said? because the question ahead, and maybe you can finish this one and start with the new one, is how do you look into these other type of assets and the SMEs? I think that's quite interesting. And I know from conversations we've had in the past that you have a very personal view on how these SMEs and other types of assets should be tackled.
Yeah, absolutely. Thank you, Tiago. I'm assuming you guys can hear me, right? So,
yes, we can.
All right, perfect. Thank you for that. And yes, I'll try to combine both questions. In relation to the first one, with my colleagues at the panel, they have answered, basically everything that I think that was relevant to state. And the only thing I would mention, which is relevant on that regard, is that when we look at the moratorium levels as a percentage of total loans, and looking, for example, by the end of last year and comparing to the European average, Portugal is like, it's a multiple almost of 10 times. So obviously, there will be an impact on the NPL ratios in Portugal due to COVID. Obviously, it's not on a one-to-one basis, but there will be some, and it is expected basically just on this multiple to be higher than in other countries in Europe, obviously. I think we're going to see differences as well, and now I'm going to try to combine both questions in the type of assets, and probably not going to see them all in one go, as was already said. Even using as a proxy past transactions. There is an average life that we can put on a portfolio and say banks sell after X months. Let's put it X years, which is more accurate. So there is no direct or immediate impact, I would say, in expected portfolio sales just because of the situation with COVID. Having said that, I think we are going to be in a different situation, and it's important to note, not just because of COVID. And I think that if we want to summarize in a very simple way from a macro perspective the problem of Portuguese corporates / SMEs, they have, by all means, and particularly compared to European average, Portuguese companies have a lot of debt, number one. Number two, lack of capital. And number three, on the number of situations, lack of professional management. And when we talk about NPLs, I like to distinguish a little bit between the NPLs and UTPs, because even in past portfolios, we are now seeing a mix. And to be honest, a handful of going concerns compared to more situations where we look at it and it's more insolvency. And that should be treated, obviously, in a different manner, not just from an asset management perspective, because we are talking about and dealing with, and will be dealing with, going concerns, companies that are important, for the economy, not just in terms of, creating wealth, but also maintaining jobs and all of that important factors. But it's also important to note that the asset management will always have to be different. When we look at a going concern that may be viable, and this is it's very important. There are the situations where they are basically zombies and there is not much to be done, as Bruno was saying, which, by the way, is a function of, I usually say with some controversy, that the balance sheet of the banks are the worst place for companies in distress, because banks are, concerned and worried about getting their money back. The solution sometimes is, some restructuring agreements. They push it to the infinite. 10 years, 15 years, 20 years, which has limited logic in my perspective, but also limits the capacity of the corporates to invest on their own business, in upgrading themselves, in investing in R&D and all of that important stuff. And basically, it's a slow path to death of the companies. And I think that the zombie term is more than appropriate for this. So from my perspective, I think it will be crucial and important for the economy for, I'll not say a new type of asset management. I think a collaboration with the current asset management, with what João Boullosa said as well, with some private equity more type of angle. not just because of the restructuring that are required, but sometimes, if not most times, it's required new money. And this is an important factor. And the typical or the traditional investors that have been buying these portfolios, in general, will not be too keen in buying a credit and then putting more money and taking control on companies, even when that situation is actually the best situation. So that's something that the market will evolve, and obviously the market will adapt, and not only from a servicing perspective, but also from an investment perspective. I do see an angle here where I'm personally very close to it, which is there will be an important place for local Portuguese private equities, because local is important, and sometimes the tickets for international private equities that are interested in NPL portfolios, but when you mention to them that, oh, we need to have an investment of 2, 3, or 5 million euros on a single name, it's completely out of the question. And also it will be important to take advantage of, obviously, of the restructuring funds coming from the EU. But that's something that I believe is going to be the path. And again, distinguishing between what I call, the typical NPLs and the UTPs. And that approach will have to be different. Again, I don't think that it will have to be completely different from what has been in the past. It can be done and will be done in collaboration with the current servicers, in partnerships with the services, creating organic, growing organically to get these skills. But I think this is going to be the path. Probably, obviously, not to all the segments and asset classes of portfolios, but to some of them, obviously, as we are seeing already in current portfolios. I don't know, Tiago, if that answers your question.
It does provide a lot of items to be further discussed. I mean, again, out of experience, what we feel is the granular portfolios and those deals which are more plain vanilla, let's say it that way, that come into the market, you can easily negotiate the SPA and turn it around relatively easy. I think what we see more and more in the Portuguese market is now looking into the so-called big tickets and the corporate and the SMEs loans, looking at them both from a due diligence perspective and from a post-acquisition perspective, from a more detailed and strategic approach, in the sense of really understanding what to do with the asset. And eventually, as João was saying, that's why I launched the discussion, putting new money in instead of just doing the traditional collection process. That's what we see. That's also what we advise on, because I think we need to be careful here. Sometimes there's the bidding process is so competitive that investors may ignore the specifics around some of these big tickets within the portfolio. So I'll go back to the question, João, Bugalho, now is this really the case? Meaning, do we see portfolios under different eyes now, using different legal approaches and technical approaches from a servicing standpoint, including the SMEs, obviously?
I think we inevitably have to do that. I mean, Portugal, it's a small market in terms of number of banks, in terms of number of servicers, but it's a very mature market. I mean, we have closed transactions for the past 10, 15 years at scale. There's a lot of players involved, lawyers, services, etc., that really knows how to do it, and the market is getting very commoditized in some of the more traditional assets we're seeing, especially on the unsecured space, for instance. But now it's clear that some of the portfolios coming to market have inside some different type of exposures that clearly require a very different type of approach than what we used to do in the past. And the key point there is, it's a new form of business, but unless you are able to deliver on that new form of business, you run the risk of losing the franchise on the other assets, because the pools coming to market tend to be mixed. So you do see some portfolios more specialized on larger, more complex exposures, but you continue to see mixed portfolios with some of that stuff inside, along with more granular, plain vanilla kind of stuff. And the more plain vanilla kind of stuff, it's something all the services are very used to working with in Portugal. But the more complex type of exposures do require a very, very different approach. We, in Whitestar, for instance, we have around 9.6 billion of assets under management. We are very much experienced in doing the regular type of flow that we've seen in the past. But we do recognize that the new market trends will require a different type of approach, and we are setting up a specific unit to address this type of market with a whole different type of skills, a very different type of approach, so no longer aiming to understand what is the asset underlying the exposure, how to get there as soon as possible, and then make a quick sell in the market and retain a fee for that. We are now looking at ways to understand if in some of these positions, and like João said, it's also going concerns. Some of them are viable in a different environment other than the banks. For the reasons explained, the banks are not really the best place where you want to be if you're trying to run a company and you're basically struggling with the treasury and debt, even if you have a sound business that with the right effort can be taken forward. And I think investors understand that. Investors are looking for the right answer locally to respond to that. And the servicer community really needs to step up to be able to address that challenge. And I think most of the people are definitely trying to do that.
Yeah. João, Boullosa, I'll ask you as well, in terms of dual capital, do you also feel that, you said you felt that some changes in the law could help, and my question to you is not from a legal standpoint what would help, but overall, what do you feel could be made differently on this market that could help improve the market?
Well, yes. If you move from the more granular statistical mode, right, where you evaluate the pools based on numbers, data tapes. Of course, you always do some kind of due diligence, but you look at the big numbers, and we work out those numbers. That's a very important work, has to be done still, but more and more the shift is toward more an ad hoc, right? Special situations case where you really have to dig upon the reality of that special debtor, and you have to foresee way out, right? So in terms of litigation, selling the pieces beforehand, or really foresee a workout more lengthy period. So the challenge is, yes, envisaging those scenarios, and you have to put then at the end a number on those scenarios. And so it's a kind of evaluation approach which is a little bit different. So you have to validate those scenarios, and you have to put a number on these different likelihoods of scenarios, because you don't know what you're going to happen. That's a bit of a challenge in terms of the organization. Yes, we've, at Dual Capital, we've been anticipating that, and we think we have a good team to deal with those requirements. And it's part of the of the development of the sector. So we have to have really good people, and in terms of the analyzing that information, working out on the underwriting team, and then of course on the servicing, yes, you have to have more, as I said, more kind of workout teams, just instead of more the typical repossessment.
Yes,
exactly, the typical repossessment of the asset, which is, of course, that's, the servicers are very capable of doing that, and we have really, Bruno said, it's true, we have a really good capacity in Portugal. We have matured servicing companies, so that there's no problem with that. But the more workout on the in a mid period of time, that's a different kind of scenario versus what has been so far doing massively more.
I'm pretty sure you will agree, Bruno, but I think we need to hear from you as well. What is, Servdebt? How is Servdebt positioned itself in terms of these new realities, or the zombies, as João Ferreira Marques calls them?
Okay. Okay. Well, first of all, I think we are talking about very different things, okay? Using João Ferreira Marques' expression, we are talking about UTPs or NPL portfolios. I think that those, we need to start by doing a separation of those. The usual NPL portfolio that comes to market, it's granular, even if you're talking about bigger tickets or bigger corporate tickets, it's full of companies that most of them are going to be liquidated. So the normal workout policy will be the liquidation of the company. Like I said before, many of them are already dead, if you allow me the expression. There is no viability for most of the companies that come on those portfolios. Having said this, of course, you're now starting to see different stuff that requires different expertise and different capabilities. But I don't think it's so easy like that. Because, first of all, you need the proper legal environment, which, to be honest, I don't think it exists. So let's pick up example of an UTP. Let's imagine that you actually have a viable company in there, and that you can actually make it a success, and you get in there, you do the right work out, and then you can exit a few years after with a good upside. Let's imagine all that. You need to change a lot of things. First of all, the company has debt, like João said, and I think everybody agrees on this. The company has a lot of debt. Many of those companies are actually still surviving because the banks allow them access to finance. Yes. The day they sell a portfolio, the day they sell the loan, the finance ends. So that's an issue. So like João said, you need someone available to put cash in the company. But it's not just putting the capital there. You need to change the management of the company, because most of those companies are never going to be viable with the current management. So there's a bunch of things that you actually need to change so that you can properly manage viable companies. Even though they have debt viability, you need to do a lot of things. If you look, for instance, to us, but I think that's common on the servicing landscape, yes, you have teams that are very used to work with more complex assets or less complex assets, but most of the times the goal is to liquidate the company. Yes, you can make capex in some of the investments you have, but again, the goal is to liquidate and to have an upside on that.
The ultimate goal is to liquidate.
Exactly. Right? So when we talk about UTPs and when we talk about the usual NPL portfolio, I think we are talking of very different things that require different approaches. And you also require a legal framework that allows you to do that. So let's imagine you buy the NPL, once again picking up on that example. What happens to the management? What happens to the partners?
And who replaces the management?
Yes,
right?
And will the partners exit voluntarily? What if they don't? So all these issues are very complex issues that doesn't make it so easy to solve. You require, yes, different expertise, but you also require the proper framework that allow you to make a viable company really viable. So as it is, I don't think you can do that as easily. You can do it, but it's not as easy. Yeah. So I think that's one of the challenges for these future UTPs. Rather than that, you'll see, most of the portfolios coming to market. Yes, they have complex situations, but most of them are already what happened, 3 years ago, 5 years ago, 8 years ago.
Yeah, and it's curious that we are discussing this, because at the firm, at VDA, we found out relatively early in time that our team, our banking and finance team, and particularly ourselves that work more on the NPLs and restructuring side, also needed to reboost the team with someone really expert on insolvency, PER/C, etc., and so on and so forth. And so we've engaged a new partner, Filipe Cota, that is now working literally next to us on these deals, because Filipe does help us looking into these SPAs and thinking about, if there's a big ticket here, we need to be careful, because perhaps the reps we need are not the standard ones. Yeah. This will be more complex, and we need to be careful. It's just not about first ranking, second ranking mortgage. It's much more than that. And just before passing on the word to João Ferreira Marques, I think, João, it's only fair to say that we also have some positive and successful cases on corporate restructuring of big tickets coming out of the NPLs. We have some successful cases, without quoting names, obviously, but very challenging, obviously. Who do we put in the management? Things as simple as how do we take control of the minutes book so we approve a shareholders general meeting and have a board of directors taking the decision on how to manage the company going forward. It's a very practical...
Yeah, because it's very different. If you look to the usual, portfolio, let's look at us. So we have 400 employees, but that's a machine. It's almost like a machine. You have specialized teams doing specialized things. You have very small teams doing very specific workouts, and I'm sure everybody does. But when you think about UTPs, that's not applicable. You can't do exactly just that. You need the proper accounting. You need things so simple as a shareholders meeting, which is quite obvious. What happens the next day when they sell it and the funding disappears? You need someone with cash to go there. So I think it's much more than just the
and the funding
workout.
is also an interesting aspect because, again, out of experience, and I'm sorry, João, I know you're still there, but let me just introduce you another interesting discussion that we see as a law firm, which is in Portugal, granting of credit is a regulated activity. And so you will always end up with the authorization from the Bank of Portugal. Whereas in Spain, as far as I know, credit granting is not so regulated as in Portugal, which means that for the new money to come in, there will need to be particular attention to these sort of rules. And some of the investors also inquire us a lot about how that funding can be made. And so, João, perhaps I'll pass on the word to you again. What do you see in terms of, again, positive cases of corporate restructuring, and how do you see the new money coming in?
Yeah, thank you, Tiago. I'll just take a point on one thing before and to your question about what legal changes, legal environment, obviously the framework is not long. And we have to keep regulatory management, and this is why this is normal environment operating partner that but if you find the how do you get control? And it's this question of what you do, but after some time, not only you regulation part have better response, but does that really work? I am a big believer about it. And some of the successful situations we have seen so far, they have been mostly amicable. Right? So
Yes.
Yeah. Because if there is no agreement then we need to start because we cannot take control and wait 2, 3, or 4 years for that to happen. The company will basically die. We will be replacing ourselves as the banks and creating making the companies ourselves zombies. So this is a question, which is how do you, from a legal perspective, do you see and what type of improvements as well could be done on this debt to equity? Because for me, there are a number of other aspects that need to be improved, but this one is fundamental, which is what will allow you to jump into a company, particularly in a non-amicable situation, right? Because let's be completely clear about it. In most situations, it will be far from amicable. Even because, shareholders and this type of stakeholders, sometimes they are not totally rational. So they even sometimes take decisions that are against their own interests, but it is what it is, right? And in relation to your question and the point about new money and how to put new money, obviously there are a number of instruments that one could use, right? Hybrids, equity, but let's focus more on the financing. Usually what we have seen in some examples, which for me are like, I have big concerns about it. You have on UTPs, two types of loans, and the banks typically sell mostly the medium to long-term loans, which are the ones being delinquent or defaulted. And but the company is still surviving on factoring lines, short-term lines, etc. And that raises two issues. The one that you mentioned, like what type of instrument, what type of vehicle can be used to provide funding. We have now the credit funds. I have a very, very, very direct opinion about credit funds. So I don't know if it was a political fight or whatever, but the requirements of a credit fund are a mini bank from my perspective. You can get to a point where you have 5 investments professionals and you need to have 20 compliance officers. So basically it will never happen. So it's not efficient as a structure. Number one. Number two is because banks typically do this thing of cutting lines after they sell, for example, a loan. And talking about the new money, obviously new money from a capital perspective needs to be properly remunerated, right? And this will create an issue as well on the typical private equity investors, local or international, doesn't really matter, on how to put in new money. And let's park for a second the how, but what type of remuneration? Because the remuneration that the company can afford and that is typical of short-term loans is minimal, right? And completely far away from the targets of any private equity fund. It will make, it will not pay the bills. Nevertheless, return a proper return, obviously.
Yep. I think I'll have to answer to you in terms of the legal challenges of what we can see. I mean, obviously, there's one that it's immediate, which is timing, the matter around timing. I think the Portuguese jurisdiction, we are well behaving in the sense that for those more typical situations, meaning going back to the NPL granular standard enforcement of a mortgage, timings actually have been working. I think where there's room to improve a lot is obviously on the insolvency, on the pairs, on the PERSIs, etc. But at the same time, that the feeling we get is that both courts and both insolvency administrators also have a really important role to play here, in the sense of understanding what is happening to the company and actually helping the company to become alive again, let's say it that way, and get out of the zombie zone. This is the first thing we see. In terms of legal amendments or legal changes, the next big one that I feel would make sense, obviously, is this whole concept around funding. And you mentioned the fundos de crédito. I agree with you. I think it's a burdensome process, obviously. It also has, apparently, I'm not a tax expert, but apparently it also raises questions around the tax treatment of those funds. But I think it's only worth to think about the credit concession and the loan granting, obviously as being regulated and subject to authorization process, but there must be ways to minimize the whole process of granting the loan and the approval processes in relation thereto. Just as you were saying, I mean, it makes little sense to have 5 guys working on the process and then 20 compliance officers making sure that you deal with AML, with internal audit, with KYC, and so on and so forth. So I think there's room for improvement there as well. What I feel, again, as a lawyer working on this, is that I do think that the Portuguese Securities Market Commission is quite sensitive to the matter, and they make a strong case to stimulate the Portuguese market in that respect. And I also feel that the Bank of Portugal is becoming more and more cooperative, in the sense that things as easy as us calling them and picking the phone and discussing solutions and new market players, etc., and so on and so forth, is definitely helping. So I think these three legal trends, I would see them as very welcome for what we are discussing here. and this is really sort of our advice by working on this. I think we've covered a lot around this topic now, and I think what I would like to hear from you now again is, how do you see innovation in this sort of business? Where does innovation come from? More than just moving a little bit the discussion from the business as it is going, how do you see your business innovating?
Well, there's definitely a lot to be done there. I mean, on the more granular kind of stuff, I think we are seeing an explosion in the digitalization of the business. A lot of our customers are talking to a computer, not knowing it's a robot on the other end. I think a lot of the more granular, big size in terms of processes will suffer a major transformation. So definitely a business where the efficiency gains are paramount for any sustainability going forward. And I think we're doing significant changes on the process. I think the way the system works, which it's always the legal system, it's difficult to move the legal system. I mean, every country have their own issues. I think Portugal is one of the best in that sense. All the players interact with the judicial system through a portal, which you don't have in Spain, you don't have in Italy, for instance, and that's certainly helpful. But the way you can play with that, the way you can offer services to your customers through the right portals for valuations, for break-ins, for cash for keys processes, I mean, there's so much happening on this front that if a servicer is not careful, it will quickly lose capacity to intervene. And competitiveness, especially in these segments that are more commoditized, it's an absolute must. And in that sense, we think consolidation, it's a trend that was discussed yesterday also in some of the panels here. It's happening everywhere. I mean, for us to be able to compete in a market that is more and more global, where there's a set of operators around the segment offering on a daily basis new alternatives for the way you perform valuations, you perform due diligence, you deliver reporting, you make sure you have tools so that the investors can have a good understanding of what's happening over their assets. It's going to move big time, and the sector is no different.
Yeah. Sure. I'm pretty sure you'll say the same, João, in terms of investment in innovation.
Yes, and we have less than 5 minutes. So yes, okay. I cannot agree more with João. Yes, technology plays a huge role, especially on the granular portfolio. So the more interactions with the portal, with the RE real estate valuations, with all the market advisors. For sure, the more the platform can exchange information with all the advisors and with all the market players, the better. And so I think the trend has been not only now, but started some time ago. So and then it's doing their job, their routine. That's fine. So I'm less certain about the less granular. So the more ad hoc stuff, the more special situations, and you have to really a little bit play around which would be the triggers or the kind of information that could be, because I don't know, an example, you are evaluating some groups of companies that have several loans, different product financings, cross collaterals, you name it. So how do you try to uniformize that, having a model that serves these kind of situations is tough. I think the bigger challenge resides on that, and I cannot answer you directly. We are even ourselves thinking about that, but usually there's a challenge, and technology shall play its importance also in this field. Because also servicing is becoming more and more competitive, and you have to find ways to get your margins, and then technology plays a role there.
Yeah. Bruno, we have 5 minutes, but
no, a little bit less.
Yes.
I think they said it. I think that it's unavoidable that we need to make changes, make things more efficient. I think everybody is doing already many of those changes. I think somebody mentioned it before in the previous panel. You know, there were tasks that were made manually that now we have robots that do it. And it's essential because you need to have more data, you need to cross information, you need to be more efficient. But then again, you know, people keep adapting very well. If you look like a year and a half ago when the pandemic started, you know, most of the people would say it's not possible to send 400 people home, and everybody went home. It's not possible to do certain type of workouts from remote sites. Well, everybody did it. Did it had a big impact on operations? In most of the times, I don't think it did. It required adaptation. It required new ways of looking to the way that you work, but I think it's unavoidable. People want information faster, people want to do it more efficiently, and I think it's a road. I think we are still on that road, but I think we are adapting. I think it's a market trend, and I think it's unavoidable. Everybody will work to get more digital, to get more efficient, to have information faster. So, yeah, having said that, I think that's unavoidable.
Recording stopped.
Okay, I'm not sure if that's a sign that we need to finish. But before the music starts playing, João, innovation, and then...
Well, on the innovation side, I think the experts have spoken, right? So I'm not involved anymore on that side of the business. So I'm more focused on what we have spoken on the private equity side and how it can help as well, not as a competitor, but in collaboration with the local players. And that's not, you know, it's not really related to technology. That's back to people anyway, hands-on.
Exactly. Do we still have time for questions from the audience? Yes?
Okay. I've got a question for you. Yesterday we were hearing from the Italian panel, but also from other panels, the importance of securitization within different markets. No? You guys, your law firm particularly, have been the clear market leader at advising in all the securitizations happening in Portugal. Do you see this trend coming into the Portuguese market?
Well, the securitization, you mean the trend of continue to securitizing?
Right.
Yes. Well, definitely. I can tell you that the latest days and nights have been around securitization of NPLs. So
we securitize everything we can.
Yes.
Wish we could do more. I wish we could securitize real estate, for instance, which we can't. We can only securitize receivables, but that's a must, and there are several reasons why that's relevant. But Tiago is the master of that.
Thank you. Well, I'm only the face of a team, obviously, but yeah, I mean, securitization, I think, plays a very important role, and it actually works. That's the important thing and the important message I would like to convey. I mean, the fact that you have a number of loans segregated in an asset pool, regulatory approved by the Portuguese Securities Market Commission, with tested structures in the market, meaning when I say tested, there has been cases where these structures have been put into high pressure, either because one of the STC shareholders has become insolvent and that was completely irrelevant from a securitization standpoint, or because you wanted to do a secondary market trade using the notes. That has been done. And then there's the big trend that I see now, which is the restructuring and the repackaging. 10 years ago, when I was still an associate, I always remember an investor coming to me with a very complex structure that they were doing in the UK already. And I looked at it and I said, I still remember her name, Amani. And she said, why do you look so scared? This is just a restructuring and repackaging. And I said, well, that has never been done in Portugal. Nowadays, we do it every six months. There's a restructuring and a repackaging that involves big investment banks looking into previous securitized deals and moving ahead and putting more financing into the deal by restructuring. And when you have securities, that's so much easier.
So will you be setting the benchmark in Italy?
I hope so. I can speak Italian, so. Okay. Any further questions? Thank you, Guillermo. Okay. Okay. I'm getting signs that we need to.
Yeah.
So thank you all. Thank you, João and Bruno. And thank you, DDC, for the invitation.
Thank you.
Thank you very much.
Thank
Thank
you.
you.
Thank you.